next guest analyst in, Oliver Slope, Blue Line Futures. Oliver, the floor is yours. What say you?
Well, just a lot of weakness here in the grain complex is that U.S. dollar continues to march to new highs for the move. But I think a lot of the weakness we're seeing today really stems from what we saw last week, which was a fundamental rejection on the back of that bullish WASDE report. We had friendly numbers come out and weren't able to really sustain a rally into the weekend, and certainly not to start the week either. So if you can't rally on good news, that's always a caution flag in my opinion. And we're seeing that kind of play out in the soybean market with a breakdown below the recent lows here, and that really puts the next line in the sand back to those October lows, 977.25 to 982, which is kind of a must-hold area for the market from a risk-reward perspective. Maybe that's an opportunity to look to the long side, but right here, right now, it's just kind of wait and see. Now, the corn market, I've been a little bit more friendly on. It's been performing really halfway decent compared to soybeans and wheat through this week, but really on the verge of a breakdown here. 420 is a must-hold area, break and close below there, and we're looking at 410 to 413, and below that, back to $4 potentially into next week's option expiration. So a lot of markets flying around. It's not just in the grain markets. It's the U.S. dollar surging, precious metals, energies, et cetera. Everything's moving around this week.
Like what you said about the corn, right? It's not as bad, right? That's when I used to tell my dad I'm losing weight. He'd say, well, you're not skinny, you're just getting less fat. How's that sound? All right. We're going to go away. Let's pay some bills. We're going to come back and talk more livestock with Oliver Slope, Blue Line Futures in Chicago, $1.32 to $2.40 across the board in lean hogs. Let's bring back in Oliver Slope, Blue Line Futures. All right, Oliver, I've got 90 seconds for you. Have at it.
Well, we talked about weakness in the grain markets, and that's what we're seeing in the livestock markets as well. And it really seems like the livestock markets may have kind of run their course. They've had a nice rally over the last couple months and just have failed to really gain any meaningful ground here over the last week and a half. And looking at the fund positioning, funds are aggressively long cattle and hogs, live cattle, about 101,000 futures and options contracts, feeder cattle, 10,000 contracts. Those are not record net long positions, but certainly at lofty levels. And then over on lean hogs, Friday's Commitment to Traders report had them net long about 120,000, which is a record net long position. So my theory is if everyone's long that wants to be long, who's left to buy this market? And if the fundamentals stagnate or even soften up, all of a sudden you have risk of long liquidation. I think we're starting to see that occur today, and really wouldn't be surprised to see that continue into the weekend.
Perfect timing. That was great stuff, too. Really appreciate you coming on. Thanks very much, Oliver Slope, Blue Line Futures. Great content. He's in Chicago.